John, I want to bring up a chart right now, folks, which really says it all. And there's been some great analysis on that. I really recommend Eliza Martinuzzi as well. Deutsche Bank in white, coming out of the crash. Deutsche Bank here, Commerzbank worse. But, John, there was a point in 2012 where BNP Paribas of France and Deutsche Bank parted ways. There are many on the street saying, wait a minute, why doesn't BNP Paribas take this opportunity to acquire Commerzbank? Is it just about nationalism?
No, I don't think so. I mean, if you look at BNP, their biggest problems are domestic France, which is a pretty difficult place to be at the moment, and their investment bank and trading. They've got enough capital, but not too much capital. They've got a little bit in Germany, and their sort of core domestic markets, as they call them, they don't need Germany because Germany is so competitive and ex-growth pretty much.
Well, so BNP Paribas doesn't need Germany. What does Commerzbank need? They've made all the right decisions. They've jettisoned investment banking, which is the huge weight around Deutsche Bank. I mean, doesn't Commerzbank go out and find a better deal than Deutsche Bank?
Well, let me give you these numbers. I mean, Commerzbank on the 4Q call, they put their hands up and said, you know what, 6% return on tangible capital in 2020, we're not going to make that anymore. Their cost-income ratio is 80%. So you tell me they did the right thing and they jettisoned IB. I mean, I'll give you a bank that can't make 2 to 3% ROE. It's in exactly the same boat as Deutsche Bank. So the only thing left is costs. And the only deal really available that they can collectively put on the table, 2 to 3 billion minimum a year of cost savings, is with Deutsche. So you'll recall we warmed up to the deal at the end of last year. Unfortunately, because there's nothing they can do, the prospect of rate hikes in Europe has disappeared for this year. Their revenue is going to track lower and lower and lower, and they need to adjust their cost base fundamentally.
But, John, it's not only about cost, right? Every time I hear of a big merger, I get told that it has to be culture, if there's a good fit. Are the two banks really a good fit?
It is. I somewhat disagree. It's all about cost now, because the only item on the P&L they can improve is the cost ratio. Think about it. I mean, provisions haven't gone up. They've gone down for years and years and years. They're going to start going back up. That's going to erode the P&L so quickly that the only lever management have is the costs. And when we're talking a lot of branch closures and a lot of headcount, then, frankly, you need new people in anyway. So I would argue that the culture, this isn't about revenue synergies, which is when you talk about culture. This is about cost synergies.
OK, but this is, you know, two banks that are trying to go through turnaround efforts, and both are failing. Is that fair?
Well, they've spent the last decade failing in the turnaround efforts. So,
right.
Absolutely.
So why are they stronger together, apart from what you're saying about the, you know, PLN and the costs?
Well, the costs, and also you get the opportunity to kitchen sink rather than constantly tweaking and we're going to refocus a little bit here and here's the cost to achieve, here's another 200 million in synergies. None of that has made enough of a difference. You need something material. You need to reset the balance sheet, and you need a proper kitchen sink and a chunky number, 2 to 3 billion a year of savings.
So how much will they shrink the new entity? You have two shrinking banks. They merge. How big will that be?
Yeah, well, when you say shrinking, I mean, they've been shrinking in terms of revenue, but you look at the headcount and you look at a lot of the cost base, it hasn't really been shrinking. They've done a reasonable job for what they could do. But, I mean, you've got to be talking 10, 15% minimum of the admin and probably more of the staff costs.
Does J.P. Morgan need to buy Commerzbank? I mean, they put a gun to Jamie Dimon's head and said, buy Bear Stearns, and he got a building, and I get all that. But should an American bank come to the rescue? No.
I mean, Germany, you look at the return on assets in Germany.
Exactly.
Why would an American bank need to go there? If you want to get people, you can give them stock.
Yeah.
If you want to get a business, you can use your balance sheet. So, no,
okay.
In short.
What's Jonathan Tyce's timeline on this? I mean, it's a huge deal, John, and that's all great and it's political, but don't you want to get this out of the way sooner rather than later? Should I, like, postpone lunch and look for something this afternoon?
I think this afternoon might be a tad early, but, I mean, you've got to be talking first half. Either they say we've explored it properly and we're walking away, or we've explored it and here's the 2-year synergy plan and here's the 2-year coordination and consolidation plan. So I think one half, we have to get something concrete either way.